What a way to end the year, Kyle. I mean, digital securities and cryptos all going up, except for XRP, of course. But yeah, what a year it's been. 2020 suffered from Corona, but it didn't impede the security token industry. I mean, perhaps it even helped.
So, where do we even begin? I mean, a lot happened this year to systematically move the industry to the next phase, but we're live, we're trading, we're growing, and the regulation is singing our tune. It makes me so excited for next year.
Yeah, no. Well, maybe, I mean, the best place to begin is with regulation. So, around the world, crypto is forcing governments to also recognize security tokens, and many financial markets are tackling things differently. So, globally, actually, we reported recently that over 15 countries have defined security tokens, with now Germany just jumping in before the end of the year here. That's huge because investors and infrastructure need to have clarity when it comes to what is allowed with blockchain and tokenization. For securities, the best approach has been to allow the use of a blockchain for ownership tracking instead of paper certificates or simply electronic registries. Still, this doesn't typically remove the central parties that are sort of made redundant in the financial regulation, but it does bring forth the ability to support security tokens with the existing financial infrastructure. So some countries even went ahead and defined specifically what security tokens are, typically clarifying that they are the same as traditional securities and must adhere to securities regulations. And there are some other notable improvements too. For example, the SEC was really busy this year.
Yeah, that's absolutely right. They have been really busy. And as we reported last year, they were actually seeking feedback from the market on how to improve. And now this year, they delivered. I think the biggest one of all has to be the regulation CF change. So instead of being limited to just raising $1 million dollars from anyone in the US, regardless of accredited investor status, you can actually now raise up to $5 million, dollars, which is a much more feasible number if you're going to pursue a crowdfunding campaign. They also increased the Reg A plus from 50 to 75, and I'm not sure why anyone would complain with a higher cap there either.
Oh, totally agree. That one definitely takes the cake, especially because they cited our industry response letter that we submitted, sponsored by Security Token Group, our parent company, for one of the reasons as to why they increased it in the first place. The SEC listened, folks. That's so awesome.
And they did some other stuff too, like expanding the definition of accredited investors to include RIAs and investment advisors, but they also loosened the rules on finder's fees to non registered security advisors. And obviously, you mentioned earlier that they won't go after broker dealer marketplaces for security tokens for 5 years in regards to the rules regarding custody management, which was complicated due to the current regulatory structure.
Yeah, and 5 years is a long time. And again, this was the SEC listening to the industry and responding positively to address the issue. And moving on, we're seeing activity on the Federal Reserve side and also from the banks, right? Central bank digital currencies are now officially a thing as China has already rolled their digital yuan completely out in the country. And the SCA team did some research to identify that over 50 central banks are now exploring, testing, or full on rolling out CBDCs either with blockchain technology or distributed ledger technology, or in some cases, not at all. And that's, of course, in line with the rise of stablecoins and digital dollars.
Yeah, we can't forget that stablecoins now represent over 20 billion tokenized dollars. So, I mean, banks are rushing into this big time, and 2020 has made it clear that tokenized money is a big deal and it's here to stay. Tokenized securities are just as big, if not bigger, and people are obviously starting to note that too as a result.
And we can't forget our most recent article from the Security Token Advisors desk either, which identified that of the top 100 largest banks in the world, 39 of them are working on security tokens or blockchain applications, and of the top 10 largest of them, 7 were also exploring projects, which means we've got some serious interest from the biggest asset managers in the world, folks.
The proof is in the pudding, I would say. But what other major things happened this year in your eye, Herwig? What really caught you on? I know we worked with some great clients this year.
I mean, definitely. I think the fact that our client Curzio Research was able to successfully become the first U.S. tokenized company in the world to trade on a foreign exchange. I think that's a big accomplishment. We also saw a number of major issuers enter into the space. We saw Consensus acquire the Quorum blockchain technology platform from JP Morgan and announce a major initiative into municipal bonds. And tons of new players joining in too, right? Some notables are Shareable Asset and Propine from Singapore. There's Mountex in Mexico, Akimono here in the US. A few new platforms partner with Securitize, so launch in Japan. I remember we got Max Crowdfund in Germany starting to do deals. And of course, my company of the week this week, CurrencyWorks, is another great example. I mean, I'm sure there are more that I'm even forgetting too. What about you, Kyle? What are some notable companies that you saw?
I wanted to highlight the Fat Brand securitization transactions that were rated by Morningstar, which is a big deal, especially because the blockchain integration actually led to a higher rating for the debt product. So, also, you got Figure doing the largest HELOC securitization since 2008 using a blockchain based loan portfolio. I mean, that's a pretty big feat. I was also excited and impressed with Republic, who launched the Republic Note, which is a security token backed by the crowdfunding platform's portfolio of hundreds of equities. The investment was completely oversubscribed. The firm raised nearly double their intended hard cap, closing almost 20 million US dollars for their asset. And then the other exciting development we surely can't leave off the list is the INX IPO. The crypto exchange received regulatory approval to conduct a regulated security token offering via the SEC for anybody, any retail investors around the world, which is a tremendous sign for the SEC's openness with the technology in the future.
Oh, definitely. And this is clearly a momentous year. While we could list amazing news all day, I think we can top it off with some secondary market action, right? So, Kyle, you're the markets guy. Give us the breakdown.
So as we turn our attention to the secondary market and we look at the performance over 2020, we first have to look at the development of the industry. At the beginning of the year, we were only looking at 2 live marketplaces. We had T0 and Open Finance with 6 live tokens total. On top of that, there wasn't really a ton of regulatory approvals happening for ATS licenses, which is that key license required to actually facilitate the trading of securities. So the climate here in the US did not look incredibly inclusive for new players. But over the last 12 months, there's definitely been plenty of progress on that front, in addition to international players who have entered the foray.
Right. I mean, just to summarize the progress on that front really quickly, I know we've seen new US-based options received ATS approvals like Texture Capital, North Capital, Securitized Markets, and Rialto Markets, with additional firms like INX jumping in through their acquisition with Open Finance, right? And we've got international players like iStocks, NExchange, and others already launching, with dozens more receiving approval in jurisdictions around the world. I know Singapore fired off at least half a dozen this year. We expect them all more or less to be live next year in 2021. So from an infrastructure perspective, the secondary market has developed tremendously, I think, from where we were compared to the beginning of the year.
Yeah, there was another significant player that entered the security token foray in 2020, which was the decentralized exchange Uniswap, which offers a much cheaper option for issuers using the Ethereum blockchain to list their token and provide liquidity for the investors. So while it's not regulated in any jurisdiction to trade securities, the platform offered an innovative solution to leverage atomic swapping technology to allow users to trade any Ethereum-based token, which combined with an issuer-managed whitelist did allow for an easier path to liquidity for smaller cap issuers, which is exactly what firms like Realty, Mount Pelerin, and IM Labs were able to leverage.
Yeah, T0 and Uniswap represented the majority of trading tokens, right? Market cap and volume for the entire industry, which actually grew, I believe, 5 times over the course of the year. So the market opened at just under 60 million, but with the addition of the monster overstock digital dividend in May, along with the listing of Aspen Coin, the new assets listed on the T0 marketplace certainly drove the market cap higher towards that $500 million mark here as we close out the year. So each of the T0 listed tokens performed incredibly well this year. The overstock digital dividend, I think, went up nearly 300% since listing in May. And T0's own token saw a strong 130% rise over the last 12 months. Those numbers aren't the only highlights, of course, as T0 drove over $50 million in trading volume over the year through its 3 tokens. That's a 10 times growth in trading volume from 2019, folks, showing that investors are getting more and more active than ever before.
You're absolutely right. T0 has done a fantastic job bringing institutional activity to their platform, which in turn drives adoption of blockchain and security token technology on a massive scale. However, that one criticism directed at T0 is a consistent thing that we've been saying on the podcast since the very first few episodes, which is the lack of assets. And while we've seen incredibly strong growth from the platform, they were really only able to bring that one outside asset to the platform, which is the tokenized shares of the St. Regis Aspen Hotel. And while it's a great start and we're excited about it, it hasn't necessarily been enough for the market, as the T0 shares have begun to slide in Q4 following that suboptimal performance and interest of that token since August. So that's why Uniswap has been fascinating, as Realty has taken full advantage of the ease of listing, completing over 50 security token offerings for real estate properties across Michigan, Ohio, and Florida. And while most of these assets are still in that lockup period, 9 have entered the secondary market through Uniswap and have thrived.
Fascinating is the word I'd use. I mean, it's been great watching them prove this concept and dominate real estate issuance this year. For the 9 that have been successfully listed on Uniswap, how have they been doing?
So since listing, the average real estate property issued by Realty is up actually about 11% this year in just equity value. 5 of those 9 properties were up double digits, with 2 more inching very close to that mark. So as we always note, these properties are paying out double-digit dividends on top of that to investors, which does bring your average return to over 20% for the average property in 2020. So you combine that with the institutional drive of T-Zero's platform, leveraging large asset values and high trading volumes, and then you bring in that retail interest from the real estate and all those other things, as well as interesting assets like Curzio Research or Merge Exchanges equity. We've seen a very diverse market that is thriving, with many bright prospects accelerating the industry's momentum into 2020.
Yeah. No, it's just an incredible year of growth and innovation for the security token market. Really, really incredible. Next week, I know we'll be reviewing our predictions from the beginning of the year to see how we did on our predictions.
That'll be juicy.
And we'll also be selecting our company of the year for making the biggest impact in 2020. But for now, I think we've done a great job giving our wonderful listeners here a breakdown of this year, Kyle.
I think so, Herwig. So, with that, let's wrap up our last episode of the show in 2020. I want to wish everyone a happy new year and remind you that you can reach out to us directly via Twitter and LinkedIn with feedback or questions anytime. And I want to remind you again that the links for any article that we covered on this episode are available in the podcast description.
Yeah, thank you so much for all of your love and support, listeners, throughout this year. We've had a wild ride coming up next year. And meanwhile, be safe out there. Happy New Year. Thanks for listening, and we'll catch you again next week.